Welcome back to the Deep Dive. In today's world, everything's hyper-connected, right? And you know how incredibly complex global systems are now, especially getting stuff from A to B, or even A to Z. It really is a modern marvel. But honestly, it just wouldn't work without this powerful kind of unseen force working away behind the scenes. So today, we're doing a deep dive into the logistics and supply chain management software market. Our mission, to really unpack what makes this market such a vital pillar for modern industry. We're drawing on some pretty cutting-edge market research here. And get ready, because the growth we're seeing, well, it's foundational. It's the backbone of efficient, secure, intelligent logistics all over the world. Okay, let's unpack this.
Yeah, and what's fascinating here is how these software solutions, they've really gone from being, a nice to have, a competitive edge to an absolute must have. It's just not about moving boxes anymore. It's like orchestrating this huge global ballet of goods. And this shift, it's driven by some really clear forces. We've got these increasingly complex global supply chains, like spanning continents. Plus, customers expect more: faster delivery, total transparency, perfect reliability.
Right.
You know, in that kind of environment, sophisticated software is basically the only way to keep it all synchronized, keep everything moving smoothly. And when we talk about the software, it covers a lot: advanced warehouse management systems, optimizing storage, picking, transportation management systems, streamlining global shipping, even really complex AI tools for forecasting demand, optimizing inventory, managing risk in real time. It's all in there.
That context is so important. And the numbers, wow, they really hammer home how indispensable this stuff is becoming. Let's look at the global market first, the big picture. Okay, back in 2021, the logistics and supply chain management software market, it pulled in an amazing $45.69 billion in revenue. But here's where it gets really interesting. By 2025, that number, it's projected to jump to over $67 billion, 67.8 to be exact. And then it just soars to incredible $149.293 billion by 2033. That reflects a compound annual growth rate, a CHAR of 10.37% over that whole period. So what does that kind of sustained double-digit growth actually mean for the global economy?
Well, if we connect this to the bigger picture, this isn't just, more money for software firms. It signals this really profound systemic digital transformation right at the core of how businesses run their supply chains, this kind of exponential growth. It shows a pivot. Supply chain optimization isn't just about saving a few bucks anymore. It's becoming a core revenue driver, a strategic competitive differentiator. Think about it. Companies using AI, say predictive analytics, to guess demand before it happens, or using real-time data to reroute shipments around, I don't know, a storm or a port closure. That's the strategic edge businesses are really investing heavily in.
Okay, so from that huge global view, let's zoom in a bit. North America is definitely leading the charge here. The North American market alone saw revenue over $17 billion in 2021, $17.271 billion, and that's set to rise pretty significantly, over $53 billion by 2033. $53.596 billion is a solid CAGR too, 9.9%. Now, the U.S., like you'd expect, is the biggest piece of that pie, a huge driver. It goes from $14.3 billion in 21 all the way to $43.8 billion by 33. That's a 9.777% CAGR. But what about Canada and Mexico? Are they just sort of tagging along, or is there something specific happening there?
That's a good question. While the U.S. is definitely the leader, Eileen-wise, it's really interesting to see the expansion in Canada and Mexico. It's steady, it's robust. Canada, for instance, goes from about $1.57 billion to over $5.3 billion by 2033. And its CGR is actually higher than the U.S., 10.781%. Mexico, too, from $1.4 billion to over $4.4 billion, with a CAGR over 10%. So this isn't just, passive growth. It really points to a broad, region-wide commitment to digitizing logistics. It suggests maybe a deeper integration of modern supply chain practices across all three countries, a kind of unified approach to resilience and efficiency.
Interesting. Okay, let's shift gears. Across the Atlantic now to Europe, which also has a very substantial and quite diverse market. Europe's market value was nearly $10 billion in 2021, $9.869 billion. And that's projected to hit over $30 billion by 2033. $30.456 billion with a credit charge is under 10%, 9.906%. We see the big players naturally. Germany leading the charge, $2.16 billion to $7.1 billion with a really strong CAGR of 10.569%. The UK, France, Italy all showing solid growth too. UK hits $4 billion, France $4.2 billion, Italy $3.2 billion by 2033. CAGRs are good, 10.3%, 9.4%, 9.6% respectively. But digging into these numbers, Russia, it shows a noticeably lower CAGR, around 7.9%, compared to many others in Europe. What might that tell us about its specific market conditions, maybe the pace of adoption?
Yeah, that's a sharp observation. You definitely see this widespread embrace of digital logistics across Europe. Germany, with its huge industrial base, Industry 4.0 focus, they're all in. But the different growth rates, they do suggest that national strategies, maybe even geopolitical factors can play a role in the pace. Russia's slightly lower AGIER, it could point to a few things, maybe specific market conditions, like you said, a different regulatory environment, perhaps, or maybe just less emphasis on integrating into those wider international supply networks compared to, say, Western Europe. It just highlights that even within a really thriving region, there are these nuances, these variations. We see strong growth in Spain, Sweden, Denmark too, all around 10% catch ER. Switzerland a bit lower, Luxembourg smaller but still growing.
Makes sense. Now let's talk about one of the most, well, exciting areas for growth globally, Asia Pacific. This region is just. It's experiencing an explosive ascent. You mentioned manufacturing, e-commerce growth that seems to be driving it. In 2021, the market size was just over $12 billion. $12.245 billion. But the projection, it surges to incredible $44 billion by 2033, $44.041 billion. Look at that key GR, a really robust 11.267%. China, obviously, a massive contributor, $3.5 billion to over $13 billion, see country over 11%. Japan also significant, $2.1 billion to $7.2 billion. But what really jumps out, like you said, is India. $1.8 billion in 2021, projected to hit almost $7.1 billion by 2033. That's an impressive TGR of 12.116%. What's fueling that kind of rocket speed?
Well, Asia Pacific's overall rapid growth isn't too surprising given, the sheer volume of stuff produced and consumed there. But India, yeah, it really stands out. That 12% plus KDR makes it one of the absolute fastest growing markets globally in this space. What's behind it? Well, a booming domestic market, for one, a rapidly expanding middle class demanding more goods, plus significant government initiatives like Make in India, which are really pushing to formalize and digitize supply chains that were maybe less structured before. It's a clear signal, I think, of their increasing integration into global trade. And that demands highly efficient, transparent logistics. You just need the software. And you also see places like South Korea growing strong, over 10% CAGR, Australia hitting $2.7 billion. And Singapore, it's small, right? $0.29 billion to $1.1 billion. But that CAGR is almost 12%. It's really punching above its weight. Suggests a real strategic focus on being a smart logistics hub for Southeast Asia, which itself is going very fast too, nearly 12% CAGR. Taiwan's solid as well.
Okay, let's round out our global tour. South America, the Middle East, and Africa, all showing significant emerging market potential. South America's market, for instance, is projected to more than triple by 2033, going from $2.878 billion to nearly $9.7 billion. CGR over 10.6%. Brazil, the region's powerhouse, is a key driver there, $1 billion to $3.36 billion. Argentina is showing really strong expansion, $2.5 billion to almost $2 billion, with an 11.2% CAGR. Colombia, Peru, Chile also expanding steadily. Then, the Middle East, we're seeing similar healthy growth. Market expected to more than triple again, $2.1 billion to over $7 billion by 33. Key GR around 10.6%. Countries like Saudi Arabia, $57 to 1.9 BN. Turkey reaching 1.1 BN, 11% CAGR, and especially the UAE, they're making huge investments. UAE forecasted to hit nearly $1.2 billion with an 11.3% CAGR. Egypt, Qatar also growing well. And finally, Africa. It rounds out our analysis. Market value projected to grow from just over $1.3 billion in 2021 to over $4.4 billion by 2033. The key GR there is just under 10%, 9.85%. South Africa is notable, $0.46 billion to $1.67 billion, over 10.5% CAGR.
Nigeria grows from $0.2 billion to over $0.8 billion. The rest of Africa also growing steadily, hitting almost $2 billion combined. So looking at these three regions, South America, Middle East, Africa, what are the unique challenges, maybe opportunities, driving their adoption of this software specifically?
Yeah, this raises an important question. What is driving it in these really diverse emerging markets? It's not always the same thing. For South America, often it's about improving, existing infrastructure, connecting huge geographical areas more efficiently, and tackling some historical inefficiencies in logistics. In the Middle East, it's often tied to that strategic diversification away from oil. You see these massive investments in logistics hubs, free zones, new trade corridors. They're literally building the infrastructure for future global trade, and software is key to running it. And then in Africa, we're seeing this really transformative impact from booming e-commerce, much wider mobile phone adoption, and these big efforts to formalize supply chains that were maybe more informal before. So each region, it definitely has its unique hurdles, right? Infrastructure gaps, regulatory complexities, sometimes skills gaps. But the common thread, it seems to be the shared recognition that robust software, it's the key. It unlocks new efficiencies, boosts competitiveness, and really helps them tap into new market opportunities, both domestically and globally.
Okay, so what does this all mean when we step back and look at the whole global landscape? From the established markets like North America and Europe to that explosive growth in Asia Pacific and this really significant emerging potential in South America, the Middle East, and Africa. The message seems loud and clear. The global growth trend for logistics and supply chain management software, it isn't just strong, it's universal. It's an undeniable force everywhere.
Exactly. That's the big takeaway. What we've seen through this deep dive is a market that's just undergoing this fundamental, really rapid transformation. This isn't just incremental tweaking around the edges. It's a systemic shift. And it's driven by these forces that just aren't going away. Digitization, continued globalization, and this absolute need for supply networks that are agile, that are resilient, able to handle shocks. And every region, whether it's developed or emerging, is actively contributing to this massive digital wave in logistics. So for any industry, really any business operating in the next decade, how well they integrate these kinds of software systems into their core operations, that's really going to define their success, their ability to navigate what's clearly becoming an ever more complex, interconnected global marketplace.
What an incredible journey, really, through the numbers and the strategy behind this logistics and supply chain management software market. It's so clear, isn't it? This isn't just some niche tech sector. It's truly a foundational element of how our modern world actually works, silently, efficiently, making sure goods get where they need to go. Thank you for joining us on this deep dive. And as we look ahead, it really makes you wonder, doesn't it? How will this ever-increasing reliance on sophisticated software, how will it not just streamline trade, but maybe fundamentally reshape international trade policies, or even change, our everyday consumer experiences in ways we haven't even thought of yet? Definitely something to ponder. We'll catch you on the next deep dive.
Welcome back to the deep dive. Today, we're jumping into the world of logistics and supply chain management software. It's really the hidden engine behind global commerce, especially now.
It absolutely is.
So our mission today is to, dig into the sources we've gathered. We want to unpack the key trends, figure out what's really driving adoption, and also look at some of the big challenges companies are facing.
Right. It's basically a shortcut to understanding how everything you buy actually gets around the world and what keeps it all running smoothly.
And these systems are just fundamental now, aren't they?
Totally indispensable. It's fascinating, really.
Yeah.
We're talking about the systems that manage the flow of goods globally. Without them, things would just grind to a halt.
Okay, so let's start with the why. What's pushing companies to actually adopt this software? Our sources point pretty strongly towards, efficiency?
Operational efficiency.
Yeah, and also needing that real-time visibility. Global trade keeps getting more complicated. Customers want things faster.
Faster and with more transparency, they want to know where their stuff is.
Exactly. So this software becomes essential. It lets companies track shipments, keep an eye on inventory, and crucially, react really fast when things go wrong, like with disruptions.
And it's not just about seeing things. The sources emphasize how these tools help businesses find those hidden costs,
Yeah.
those inefficiencies you didn't even know were there. It's like getting a financial x-ray of your operations.
Right. So it helps reduce costs, gives them a competitive edge.
And it's more than just efficiency, I think. If you look at the bigger picture, it's really about survival, about agility.
It's agility, yeah.
Being able to adapt when the market shifts or, a global event throws a wrench in the works.
Yeah.
These systems allow that quick pivot.
Okay, so efficiency is key. What's the next big driver? Our sources scream e-commerce.
Oh, absolutely. The explosion in online retail, it's completely changed the game.
Businesses are dealing with way more orders, right? Across all sorts of different platforms.
Right, and think about things like same-day delivery. The logistics behind that are incredibly complex.
Yeah, so the software has to handle everything from optimizing that tricky last-mile delivery, managing warehouses stuffed with goods, even processing returns.
Which is a huge headache in itself.
Definitely. And lots of retailers are going for omni-channel now, selling online, in-store, everywhere. So you need these integrated platforms just to coordinate it all and get orders out on time.
Which brings up that key question, doesn't it? How do you keep that customer experience smooth when there are so many moving parts between the click and the doorbell?
And the answer seems to be
integrated platforms. Our research points to that again and again. You need something connecting warehouse, transport, customer service, everything.
Makes sense. Okay, driver number 3 seems to be this wave of automation and advanced analytics. AI is everywhere now.
It really is filtering into logistics software significantly.
Yeah.
We're seeing companies use it for demand forecasting, getting much more accurate predictions.
And inventory management too, I suppose. Making sure you have the right amount of stock, not too much, not too little.
Exactly. And route optimization is another big one. AI can figure out the best routes, adapting in real time to traffic or weather.
So these smarter platforms help companies become more agile, cut down on manual mistakes.
And make decisions based on actual data, not just guesswork. That really boosts productivity and makes them more resilient when, shocks hit the supply chain.
Yeah, that resilience point is crucial.
And what's really fascinating here, I think, is how AI shifts things. It moves management from being just reactive fixing problems after they happen to being proactive.
Predicting issues.
Yeah, anticipating bottlenecks maybe weeks in advance sometimes and mitigating them before they cause a crisis. That's a huge shift.
Okay, so those are some powerful drivers, but like anything, there have to be challenges too, right? It can't all be smooth sailing.
Oh, definitely not. And the sources are pretty clear on the hurdles.
What's the first big one? Cost seems like an obvious place to start.
Yeah, high implementation and licensing costs. It's a major factor.
So we're talking software licenses, maybe needing new hardware or infrastructure upgrades.
And training employees to actually use the new system effectively. That all adds up.
And that upfront investment can be really steep, can't it? Especially for, say, small or medium-sized businesses.
Absolutely. The sources mention that for an SME, some of these top-tier logistics suites can cost as much as their entire annual marketing budget. That makes the justification, the ROI calculation, really tough.
Even for bigger companies, budget constraints can still limit how far they can go, right? Maybe they can't scale up or modernize everything they want to.
Precisely. It forces this important question. How do you balance that immediate cost against the potential long-term payoff in efficiency and staying competitive? It's a big strategic decision.
Okay, cost is one thing. What else? Integration seems like another headache.
Huge headache. You've got companies still running on older legacy systems, sometimes decades old.
And these old systems just don't play nicely with the new cloud-based or AI-driven platforms.
Not at all.
Yeah.
Trying to connect a shiny new logistics platform to an existing older ERP or warehouse management system, it can be incredibly complex.
Time-consuming too, I bet.
Very. It often really slows down the whole digital transformation push. It's like trying to plug a cutting-edge gadget into an old-fashioned power outlet.
Needs a lot of adapters.
Exactly. And even then, it might still be clunky or unreliable. It's not just making the systems talk, it's untangling years, sometimes decades, of ingrained processes and data stuck in silos.
Our research suggested this is often why these projects go over budget or miss deadlines.
Very common reason, yes.
All right, so cost, integration. And the sources mentioned a third challenge, framing it as maybe the most critical.
Ah, yes. The skills gap. The shortage of people who actually know how to handle this stuff.
Right. You need professionals with expertise in both the technology and the supply chain side of things.
And that combination is surprisingly hard to find. You need people who understand IT systems, data analytics, and the nuts and bolts of logistics operations, warehousing, transportation.
Especially in some developing regions, apparently, where the need and potential growth are massive, but the specialized talent pool isn't quite there yet.
That's a really significant point. If we connect it to the bigger picture, it means even the absolute best technology is limited if you don't have the skilled people to implement it, manage it, and really leverage it properly.
So the talent gap acts as a bottleneck for innovation.
A major bottleneck, yeah. It
Yeah.
holds back the potential of the whole sector in some ways.
Okay, so despite those hurdles, cost, integration, skills, the market is moving forward. It's evolving fast. Let's talk about the big trends shaping the future here.
Right, and there are definitely some game changers.
First up seems to be the massive shift towards cloud-based platforms. That feels almost standard now.
It's becoming the default, yes. And for good reason. Cloud offers that scalability. You can adjust resources up or down as needed.
Plus remote access, which is huge for global operations. And updates are usually seamless, handled by the provider.
Exactly. It frees companies from being tied to on-premise servers and all the maintenance that involves. Our sources really highlight how cloud enables this shift to more agile, connected ecosystems.
It fundamentally changes things, doesn't it?
It really does. What's fascinating is how it takes logistics from being this sort of fixed, localized thing to something dynamic and accessible from anywhere in the world. It fosters collaboration across huge distances.
Okay, so cloud is foundational. Then there's the continuing impact of AI and machine learning you mentioned earlier. Seems like they're really starting to redefine operations.
Definitely. We talked about forecasting and route optimization, but AI is also getting much better at risk mitigation, identifying potential problems in the supply chain before they happen.
And suggesting solutions.
Sometimes, yes, or at least flagging the risk with enough lead time to react. It's all happening in near real time. As these tools get more integrated, companies using them just make faster, smarter decisions. It's a clear strategic advantage.
Which raises the question, I suppose. How much further can this go? How much more predictive and optimized can supply chains actually become?
That's the multi-billion-dollar question, is it? The potential is still enormous. We're likely just scratching the surface of what AI can do in logistics.
Okay, final big trend our sources pointed to. Sustainability, green logistics.
Yes, this is becoming increasingly important. There's pressure from regulators, setting emissions targets, and things like that.
And consumers care more too, right? People want to know the environmental impact of the products they buy and how they're delivered.
Absolutely. So companies are responding. They're actively looking for logistics software that can help them track and reduce their carbon footprint, optimize routes for fuel efficiency, monitor energy use in warehouses.
So it's not just a nice to have anymore.
No, our sources are clear. This shift towards sustainability is becoming a competitive imperative. It's about brand image, compliance, and frankly, long-term operational efficiency too, as energy costs rise.
It really shows how technology has to adapt, doesn't it? It's not just about profit anymore.
Exactly. It connects to wider societal values, to corporate responsibility. Technology is becoming a key tool for addressing those environmental challenges within the supply chain.
So wrapping this up then, what does this all mean for you, our listeners? This deep dive really shows a market, logistics, and supply chain software that's incredibly dynamic. It's this blend of constant innovation driven by absolute necessity.
Yeah, because every little improvement, every efficiency gain, every bit of cost saved or carbon emission cut, it all translates into real-world impact. It affects global trade, local economies, and ultimately the products that get delivered right to your door.
It makes you think, doesn't it? How will this increasing intelligence, this growing focus on eco-consciousness within these logistics systems, how will that continue to change what we expect as consumers and how businesses operate even in just the next few years?
Definitely something to watch.
Food for thought next time you track a package online. Thanks for joining us on The Deep Dive.